the RBA has signalled it will be increasing rates again this year. The big question, will it happen as soon as today? Joining me is business reporter Edward Boyd. Ed, the Reserve Bank is being encouraged to lift rates. This is in part to address the rising wage growth, but that stubbornly high monthly inflation figure was a big one, wasn't it?
That was a really big one last week, Tom. The monthly inflation indicator for April surprised the market, with inflation coming in during April at 6.8%. So you go back to the month of March, it was 6.3%. So inflation on a month-on-month basis actually increased slightly in the month of April. Part of it was due to changes to the fuel excise tax, which happened in April the previous year. But no matter which way you look at it, inflation did increase a little bit in the month of April. So that's going to be a concern for the Governor of the Reserve Bank, Philip Lowe. So he really wants to bring inflation down quickly. We know it peaked in December and is slowly on its way back down, but it's not coming down fast enough. Inflation is going to remain high throughout the rest of this year. It's probably going to stay at around 4.5% potentially by December, maybe a little bit lower. So to bring down inflation, the Governor will need to lift interest rates. We also know there's a wages growth is increasing in Australia as well. During the March quarter, wages growth was 3.7% at an annual rate. We've just had this Fair Work Commission ruling last Friday, increasing the minimum wage for about 2.5 million Australians by 5.75%. Those changes come in from the 1st of July, so we're not going to start to see the impact of those wage increases until later in the year. But the Governor of the Reserve Bank, he does have a challenge. Does he lift rates this month? Or 10 out of 30 economists believe we're going to see a cash rate rise today above 3.85%. But the rest of them believe we will see rates increase potentially later this year around the month of August. So the Governor himself told Senate estimates recently that rates will need to continue rising in Australia. So everyone's bracing for a rate increase. We're just not sure if it's going to be this afternoon or in a couple of months' time.
Yeah, so if that happens today, the pressure on households, those with a mortgage, is going to ratchet up even further and basically put households at an all-time high in terms of how much they're paying of their wages over all the household income on a mortgage.
Exactly. Look, mortgage stress is classified as when you're putting away more than 30% of your monthly income onto your monthly mortgage repayments. And right now, it's at about 28% of the Australian population is classified as at risk of mortgage stress. And if rates do rise to 4.1%, they're currently at 3.85. If they go up another 25 basis points, roughly 30% of the population will be at risk of mortgage stress, where you need to start reprioritising spending. So the Reserve Bank wants people to be putting more money onto their mortgages as opposed to spending it in retail stores, out at cafes and restaurants, because that, in theory, pushes up the level of inflation in the economy and keeps inflation high. So if rates do go to 4.1%, we can just show you for a $500,000 mortgage, it's roughly $76 each month more in repayments. But if you go back to before rates started rising, so you go back to April last year, it's about $1,100 more each month someone would be paying at the higher rates than they would have been at record low rates. And obviously those figures go up substantially. So for $1 million loan, you're looking at about $2,300 more each month in repayments. So that's a substantial amount of money that average households across the country need to find and need to put onto their loans each month. And it is putting more and more people into mortgage stress. So this is a problem the Reserve Bank needs to delicately balance: the housing market versus the economy, and inflation staying too high, potentially pushing Australia into recession. So we actually get the GDP figures this week as well, Tom, for the first quarter. So they're going to play a key role for the Reserve Bank as well.